Hey, how's it going, guys? Good to see you out there. It's the 14th of September. It just seems to go a little faster. I don't know what's going on. Maybe it's just because these markets are actually starting to do something kind of fun. And what does fun mean? Well, woo, we just erased the majority of the gains we have the last few days in one day. And so there is some skittish stuff going on. What am I talking about? Well, let's talk about it. I've got some trades to look at, and guess what? They're all yours. I think almost every single one of these came from this class last week, and they're fabulous. So, of course, you're taking responsibility for it because they're your trades. You get it. So, inflation concerns put us right back to support levels, and they did it, unfortunately, for my bears out there and me myself, quickly. It just sucks because it'd be nice to see 3.1%, what is it, 1,200 points on the Dow, whatever it was yesterday. I'd like to see that over 4 or 5 days, not one, because that way we could actually get into some bearish trades and they would work for us. And oh well, what do you do? So we have pretty much reset all of last week's move. It was so funny building this class from Wednesday to the previous Wednesday because my outlook didn't change, my expectations didn't change. They did from Wednesday to Thursday to Friday to Monday. But come Tuesday and this morning, I'm right back to where we started. So the sentiment out there is completely reactionary. Now, if you guys don't believe that there is bearish sentiment out there, I know these markets bounce, and when they bounce hard. But I cannot believe how fast these rats jump ship. I shouldn't say rats. That's mean. I apologize. How quickly investors jump ship. It wasn't even a run to buy puts. Now, we did see a small climb in the VIX, but it is relatively low. A 1,200 point, 1,300 point drop in the Dow, and we get a little blip up to mid-20s in the volatility. No. This would be personally. This would warrant something in the high 30s, mid-30s, things like that. So it's either there's speculative buying going on, people trying to catch the bottom, and if they don't, they're okay just dumping it all because no one's hedging anything out. And that's what I take the VIX as, is are people rushing to hedge things out because they want to keep their positions. This is just an absolute abandonment of anything bought over the last 3 days. Hey, let's throw some darts out there. Let's see if we can make a couple of bucks. Oh, CPI still hot. Hit the panic sell button, and it all went at once. Not a lot of hedging, but we've talked about this over the last couple of weeks, folks, and we know that this could be an oversold bounce. We look at the weekly charts, so and so forth, stuff like that, and this kind of proves to me that it was an absolute speculative buy, and people were quick to abandon. So completely reactionary. Volatility isn't in there, which means there's not a lot of rushing to hedging or keeping positions or trying to margin them out. It's just, hey, is this the bottom? Wrong. And we're back down to where we started. CPI shows increase in price regardless of lower energy costs. Yeah, we knocked out some gas prices, but the funny thing is the consumer took the savings on those gas prices and went straight to the stores, which is great because if you take a look at what we've seen in jobless claims, they were flat, they were low. So jobless claims are low. We're seeing that there are still some companies hiring. They are on the lower end of the spectrum. What I mean by that, folks, is we've got a lot of retail, a lot of like fast food, some of those jobs that are just, they can't hire enough people fast enough. Higher end stuff, I don't know. I'm not sure. But the data has been showing that the economy is moving along. People are employed. That's great, but they're still spending money, which the Fed sees as bad. So super hawkish, and that's kind of the 2 cents that I've come up with it. Boy, I said something on Mondays. Let's get to some trade ideas, guys. We've got CTRA, SDS, SOL, and SLM. Every single one of these came from last week's class. Great work, everybody. You guys rule. So, awesome job. So, let's get into CTRA and SDS. Now, yes, it's going to be a little bit difficult to buy something to the bull side here, but we can't really deny what is outperforming. And yes, it's energy. It's this flight to safety. We've got this beautiful ascending triangle pattern going on. We talked about this last week, and I believe it was a pivot point when we talked about it last, right? Let's see, that's a Wednesday, Thursday, Friday, Monday, Tuesday. I might be a little bit early. I think it was this bear candle or this point here. So We also discussed that, hey, this would be a good thing when you get a shorter-term target at 32, but if you want to wait for the markets to indeed show some strength, which they didn't, but boy, the flight to safety sure moved this bad boy back up to resistance. A breakout above 32, it's looking good. So for my traders that did the targeted butterfly, maybe a bull call spread or target up to the 32, regardless of what it was, it's doing great. Now for you guys that haven't gotten into this trade yet, here's your opportunity. If this can consolidate and stay right where it's at, and we move higher based on any sort of worries in the markets and continuation or flight to safety, this would be one to go a little higher. So awesome job. Thanks. It looks great. Let's move on over to SDS. Now, this one's not blowing my socks off, but I do like the reaction that it had. This is an inverse ultra short S&P. And so we had this brought to us saying, hey, instead of going out and trying to short the SPY, might be a little bit expensive. This is a little cheaper, and it looks really awesome. So thanks, Matt. And it looks good. It bounced off of a 42 support level. Yeah, it was below its moving averages, but it's right back into a playable trade. I'm going to go ahead and echo kind of what Corey said. A little reluctant to jump onto anything in the short term. I have to agree with that. The reaction that we got yesterday was so bipolar. It was just crazy. So I don't really. I mean, I'm bearish, but we'll see. Be patient. If we don't get that huge bounce today and then tomorrow and try to say, okay, that was a super overreaction to a higher CPI number, then this won't come to fruition. However, if you're patient, you sit on this at 46.5 to 47, maybe up in this area. Look at this. Beautiful ascending triangle breakout. It's a good way to take advantage of a weak S&P, a little cheaper, just playing it to the upside with the inverse. So I do like it. I do like it. Awesome. So let's get to our next trade. This I had, and folks, I got to go to my post-it notes because they're reliable. My post-it note says it was on the bearish side, but sideways. I don't know if I mismarked that, but if we take a look at it, and whoever submitted this, great job. Let's see. Let's count back. So this is Wednesday, Thursday. Oops, I'm going backwards. Wednesday, Tuesday, Monday, Friday, Tuesday. This is probably where we saw it, right? So Wednesday, Thursday, Friday, Monday, Tuesday. Somewhere in this area. So I thought it would be more of a bullish to sideways trade. Regardless if it was bullish or bearish, I like the sideways, and it's perfectly in line. Let's draw some lines here. It looks really good. We have an inside day. This might be leaning more towards the bull side. Taking a look that it is looking down at the bottom, seeing that it is in the utilities company. This is their second kind of flight to safety. We've seen a lot go to energy, and then it goes to utilities. So this might be something sideways to bullish if we see continued weakness in the markets. But I do like that range between, just above 80 here and about 77. Right through here. So we'll keep it on the sideways watch. If you're going to make a mistake, or not a mistake, but if you're going to err to one side, it's kind of tough, because if these markets have another sell-off like we saw yesterday, I don't know what survives. But this is hung in there. This is hung in there. Okay, let's get to the bears. Now this one's gorgeous. It was on our watch list last week. It didn't quite trigger. We discussed a few things. Hey, if it could break this floor, we got this descending pattern going on, and obviously it popped up, but it didn't get above that 20-day moving average as it fell. Confirmation yesterday was beautiful. It's a follow-through. It feels like we're kind of chasing it here. That's fine, but anybody that's in the diagonal or something targeted or verticals, you're doing great. Anybody who wants to take advantage of this further, you might just want to put this on the watch list and see if it can bounce with everything else. But I had a feeling, and I know you guys all did as well, that this sector is just not going to make it. The first impact of a slowdown would be, why would I borrow money at a higher rate and pay for a higher house when I really can't afford it? This should be kind of my leading indicator, is the real estate. It should be. I'm still seeing houses for sale, houses coming down in price, but they're still being purchased. That needs to stop, and that could be part of that CPI number. The consumer's employed, they have money, and they're still spending. This should be, boy, that's opinion, the first indication that, oh, we're falling apart. The recession, not recession, but we're slowing down. And it looks, as far as at least this stock, that it is. So it's trying to catch a falling knife. You could wait for a little bit of a bounce. Maybe if we get it in the overall markets, you could put it on your watch list, or you could look for something similar in its sector. But I had to show it because it was an awesome trade brought to me by you. Here's SLM. This is the last one. Financial, kind of the same idea. It looked great last week when we talked about it at this $15 mark. Let's see when we go back. I'm not counting the days right. Somewhere in this area, it looked pretty good, like maybe a bear rally was going to happen, and it did. It got a little higher than we thought as this kind of gapped up to the 16. But boy, it respected that resistance that I had back here in May. Rolled over. If you're a little reluctant, wait. Just wait for this thing to confirm. It was lower there earlier today. I'm not sure where it is. This snapshot was taken 20, 30 minutes ago. So it might be lower. But if it closes there, a target of 14.5, sure. But I'd be more to the 14 level further down. So it's a good trade. Excellent trades, guys. Thank you so much for sharing those. All right, let's get into a market analysis. And you might be surprised that we are very bearish. So as of Monday, Tuesday, and today, or whatever it's been today, we're down 3.11%, 2.95 on the SPY, 3.75 on the Qs. This is a pretty substantial drop. Unfortunately, like I said earlier, it happens all at once. It's hard to trade. If these numbers continue, we're in for another pretty substantial move. So you can see that it was all bearish across the board. Obviously, oil bounced. Gold struggling, kind of going sideways. It just parked itself. It's kind of worried about what the dollar does. I truly believe that once we increase interest rates, gold's just going to react according to it. So if we increase by 50 basis points, this will drop a little more, and so on and so forth. That's my opinion. But let's get into the charts. Look at the volume in yesterday's move. This is just what really has to shake any sort of the wheels of anybody that's glass half full. Bulls will jump ship. They're not going to sit there and try to hedge out and buy into weakness. If it's not there, they're out, which has got to really kind of shake the confidence moving forward. This isn't anything outside of what the Fed's already talked about. The expectations of 2022 and into 2023 are grim. Not too bad. Just saying a little bit pessimistic. We haven't felt it as an economy. We haven't felt it as a consumer. But the markets need to be reminded that we're not out of the woods yet. But when they are, boy, they react. They react. So we're right back to this little trend, or this move to the downside. I do like what Corey said yesterday, and I'm going to echo it completely, to revisit these lows in June. And I believe Darren said this 2 weeks ago. It's high. It's a little bit more feasible. It's high. I should say the probabilities of us going back down to June lows is, for me, a higher probability of actually coming back to this 430. Yeah, okay, geez, Joe, tell me tell me something I don't know. But we are in a respectively large range, and this is going to be reactionary. We're going to get into some earnings. I don't know how we're going to get out of earnings with anything optimistic, but boy, we do have speculative buying, and we've seen it a couple of times. Just as soon as the speculation traders just get sick of it, is when I expect to hit these lows. All right, there's my 2 cents. So let's jump over to the diamonds. It's the exact same thing. Just the reluctancy to follow through any sort of shaky news, any sort of worry. I believe I talked about, hey, there was a lot of selling that came into strength, so anytime that the markets went higher, sellers were apparent. These are just some big candles. So yes, it's pessimistic, to say the best. Or at least, I should say, right? So let's get over to the Qs. Same idea. I don't want to draw lines. You guys have seen these charts many, many times. You're following them along. weakness and strength is where you find it. In fact, we'll get there in a second because some of the sectors, they're the exact sectors you think would go down, and the ones that are hanging in there are the exact ones you think that would hold on. Economic reports. Yes, that's right. Well, what caused this? Well, it's not a cause. I truly believe it was the expectation that nobody just really wanted to talk about it. And it was the CPI. Now, to go from -1 to +1, you got to go -1, then 0, then +1, right? That is a huge miss. That's a big miss. And the markets reacted to it as such. I'll tell you what, let's point our eyes down to this PPI, and I'm not sure if this number was adjusted, but it is in line. However, the expectations weren't for as aggressive as a drop as it had last time. So we were already expecting things not to be, that first initial fall to the downside. Sure, we're going to get another one, but it won't be as aggressive as this first. It's not going to be a 0.4% negative. It's going to be a 0.1. So it came in line. The market's currently, they're just taking it for what it is. I truly think they're still trying to just shake this number off. So we'll see where we go from there. Sentiment's a big part of this. Now, we have the jobless claims. We've seen this number low. Look at that. Last time, 222. They're expecting a little bit of a tick to the upside, but we're not seeing people losing jobs, right? People are still employed. Retail sales is actually, I think, going to be pretty interesting. I want to see, hey, if the CPI is higher and it has nothing to do with energy, it must be because we are still consuming. And I don't know if it's going to be houses, because there should be at least the start of a slowdown in housing just for the fact that the interest rates are higher. So we'll keep an eye on that. Other than that, I don't think anything's going to have too big of an impact. Manufacturing, of course, Empire State Manufacturing. I'm throwing stuff out when import-export price. I'm just talking about anything that's inflationary. That's my 2 cents. All right. So let's pull the class. Get our market direction. Let's go ahead and launch this. I want to know what you guys are thinking. Right? There you go. Let's watch voting in real time over here on you video guys. But yeah, a little bit of a on Sunday's class thinking that okay, we might just kind of sustain where we're at, and then come Monday and into Tuesday for sure we're right back into selling. It really just depends on your outlook when it comes to your top-down approach. Sentiment, to me, folks, is obvious. It's really interesting because you can have a hypothesis, you can have an idea of where things are going to go, you can do your probability analysis, but once you give it to the public and you see the reaction, that's not fake. That's real. We dropped a massive amount very quickly based on a number that was off. So we know where sentiment's at. That is a fact. There's no hiding the fact that we fell as hard as we did yesterday based on a little bit weak, or I should say stronger of a CPI number than expected. So the skittishness is definitely there. The bullishness is tentative at best, and no, they have no problem pulling out. So we'll take a look at that. I wasn't sure. Somebody tell me if I'm wrong, but did I not see Bitcoin drop almost 10%? Was it down 8, 9%? I don't know. It dropped a massive amount in one day. It was crazy. But so yeah, definitely reactionary. All right, so we stall out at the 90% vote. I'm gonna go ahead and close the poll. I'm gonna share it. And there it is, guys. Pessimistic, but not too aggressive. 22% -2, 56% -1, 33% 0. So we're still kind of -1. And that might be partially due to the fact that we had such a huge move to the downside. So we've probably, what's the word? Kind of burn out. The bears came in all at once, which I wish they wouldn't, but they did. So we'll see if we can subside at these previous support levels that we visited last week. Thanks, guys. That's awesome. Go ahead and put that back. Let's hide the poll. And I am right in line with you folks. Now, I'm still at the -2 on the monthly, and I'm at -1 on the weekly. I didn't change this. It was so great. So I was trying to rebuild this class from the previous week, and I took a look at where we were from where we started. And I have the same outlook that I did last week. Why is that? Because we're right back to the same levels that we were at. So I'm in line with you. I might be. I'm weekly. I think we're all in line. -1. Monthly, I'm a little bit more bearish, and the reason being is because boy, the reaction to anything bearish, it comes with massive selling, massive selling. So let's get into the sectors. Lo and behold, energy, flight to safety, 4.61%. Let me get into that. Communication services down 3.2%. They were already beat down. Utilities was interesting because it just kind of meandered around healthcare, financial, real estate, second weakest. It should be. Real estate should continue to stay down in those bottom 3 weak sectors if we continue to see interest rates raise. It just should. Doesn't mean it will. It's just my kind of opinion based on what I'm seeing. Here is energy, and it has that nice little bit of an ascending triangle pattern, something that could be tradable. I'll show you the next chart that I do believe is tradable, which is communication services. Little ascending triangle pattern here. You can play something range bound between 80 85. Understand that this is an ETF and it can be traded. So for you guys that want to do something, hedge out, you got like 4 or 5 bears out there. You want to throw out a couple energy sector stocks to kind of hedge that out sideways up. This is a pretty easy way to do it. Now, on the bearish side, I do like communication services. And why I like it is because it is breaking support. Beautiful technical textbook, I should say, bear rally, decreasing volume as it comes up, touches a beautiful, right after a crossover. That's a 2050 crossover. Yeah, I'm nerding out on the candlesticks, guys. At a resistance level, let's draw this line from back in May. Touched it in May twice, actually. Well, maybe at least once. Came back, consolidated on it right through July into August. Popped up, a little bit of a hiccup, and I guess you guys can read the book. It looks nice, so I do like it moving forward on a technical basis. So let's get to my summary, and then let's go look at some trades. Sorry, guys, I'm going to move the questions box out of the way. Okay, let's get to some trades here in a second. So in conclusion, back to support levels. Strength has been sold into once again, this time very hard. I had strength has been sold into because of a candlestick that we saw before Wednesday's class last week. It gapped up high and it immediately came down. It was a big red candle. Take a look at it, folks. It came all the way back down. So I've seen strength sold into. This time it was super hard and there was no strength. This was just an abandonment. I should actually change that to an abandonment of positions. So quick to dump on bad news. Sentiment is, will bulls lose faith and confidence in these markets? There's only so many times you can see a market rally and have one candle that erases a week or a gap up and it's erased. We had a nice bounce over the last week, half of last week into Monday, and it was erased. At some point, as a bull, you're going to see a move higher and you're just going to stop pushing the buy button. That's going to cause consolidation. Then you get people to throw in the towel and you get what's called capitulation, and that VIX will actually get to a level we can measure. I'm going to say it, this is hilarious because of how bad we've seen these markets go. We have not hit the panic point. My personal outlook, we have not even come close to hitting the flush out and the panic point that these markets might need. Okay. Inflation obviously in control of the markets. The Fed remains diligent on inflation. There's no way they can't be. This number on the CPI came out. Their hands are tied. They have to raise aggressive. So the proof is kind of in the pudding. That's enough of the soapbox. Let's get off of it. Let me go out and look at some trades with you guys. And here we are. After a pretty substantial move to the downside, the markets are just kind of consolidating sideways from here. So we'll see. All right. So what trades are you guys looking at? Okay. Yes. Let's start with Brian. Brian has NVIDIA. And this is a very tough market. Corey said something yesterday that, yeah, he's put on some bearish positions, and I think they were last week. I think he put them on at the end of last week before this. But now where he's at, he's not sure what to do. I know that Darren and Rob were talking about on Sunday that you just kind of have to sit there and we don't really have a tradable pattern. Now today or yesterday we do have some confirmation, and this is a great example, Brian, thank you. This is NVIDIA. So yesterday, 2 days ago, it didn't look very good. It looks like it was still in a bear rally. Unfortunately, we get one big gap down with huge volume, but it is breaking that support level. So we do have confirmation to the bear side for you guys that want to keep going to the bear side. That's a little bit weird, but let's go ahead. That's that July support. But this last previous pivot is a little bit better. And yes, this could definitely float. You're in the right sector. It makes sense. You could do anything you want here. He's got a 135, 120 bear put spread for September 23rd, and that's great. I'm fine. I'm okay biting off big chunks. This is NVIDIA. This thing moves quite a bit. Let's see if I can stretch this out and move it up higher here. There we go. 120. Yeah, 120 makes total sense. He's got this going on. Oh, jeez. Can I draw a straight line? I wish I could draw a straight line with a pitch to it, but I can't. It only draws straight lines horizontally. So here's that break from July. A little bit of a pivot. What a weak pivot there. But nice break off of the previous set the beginning of this month. Yep, I like it. I like it a lot. Excellent. Thanks, Brian. Some of these things are pretty cut and dry. And the best is, even if it gets down to, in the mid-20s, that's going to be a pretty good trade. So, cool. All right. Steel. Dan's got steel. Thanks, Kit. Kit says that the SO was on the bull list. So I had it on the bear, but it looks like a bull. But it looks like it's more of a sideways trade. Thanks for that, Kit. Whether it was a bull or a bear, it's definitely sideways now, but I do see why it would be a bull. If you guys want to reference back in this video. Okay, steel. Whoa, look at the fall that had. All right. It just couldn't get back above that 26. I should zoom in on this, but I do like the overall descending lows here. So we got to go back to kind of this area, maybe here in June. We got a little bit lower that back in the early part of the year. I might just throw that out and we'll just focus on June here. So yeah, 20 might be a pretty good target for this to fall or hit. It looks like it's trying to catch a falling knife because it fell so hard. But if this weakness continues, it's diagonal. I like it. I'm going to go ahead and put it just on the bear side. You don't have to be super bearish on it. Let me do it a little bit more justice and zoom in on it, because it's going to look a little different as you get closer to it. There we go. That's a little better. Oh, yeah. No. It's good. I'm cool with those July lows. I think I said June, but I meant July. Yeah. Oh, no. This is the June consolidation. Looks different when you zoom in. But July target, for sure. For sure. Especially if we get continued weakness in the economy, let alone these markets. Awesome. Thanks, Dan. Got another one. DG. Let's do DG here. I'm going to zoom in on this. This looks like a possible put butterfly. 220, 230, 240. He's got a question mark. Could this be a possible put butterfly? Let's draw some lines. What do you have? 250 at the top? Or was it 40? 230, 220, 240. A targeted butterfly? It could be. You got to worry about that little hiccup, and that's probably why you put the question mark on there, I bet, Dan. Yeah, you got to worry about that little bit of a hiccup. But it could come down there, maybe meet that and consolidate. Maybe you move this butterfly up a little bit. Or I don't know if they've got $5 strike prices, right? 240, 235, 230? Do something a little shorter. What's the extension? Well, I guess it depends on the expiration cycle. But if it was to break that floor right through here, I'd be happy with what the 240, 230, 220 for sure. Because it might just come down here and then consolidate, because you guys can see back in this area it had some support. Dollar General. That thing held in there pretty well for the most part. It really did. If you take a look at that chart. But it's starting to bleed off. All right. Cool. All right, James. 2 bulls likely next week, waiting for confirmation. FL and Wing. Let's take a look at them. Foot Locker. Whoa, I haven't looked at this one in a while. Okay, sure. James is talking about likely for next week, waiting for confirmation. So I imagine a Foot Locker, good move over the last couple of days, and it didn't really fall apart, did it? If it can stay up in this area, boy, I don't know if this is. We get whatever. What was this news? Was that its earnings? It's interesting because with the way the markets are and the expectations, well, the consumer's still consuming, so that could help us in the short term. If this is being maybe acquired or maybe the rumors of purchase, but you definitely have a range here. To the bull side, wait for it to confirm above that 40. That'd be me personally. Let me put it down on the bull side since it is above its averages. But let me also add a sideways to that because, boy, that $36, $40 range could be something cool to play with if you guys were condors, right? Some sort of condor. That'd be kind of neat. Yep, for you Bollinger Band guys out there, there's a range for you. I appreciate that. Let's see, what else we got here? Thanks, James. Let me look at your other bull. I haven't looked at Foot Locker in a while. That was Nate. Wing. Wing probably has spreads that are too big for me, he says. Oh, well. Wow, look at this, though. Restaurants. It's always been a flight to safety. You guys have heard me tout hundreds and hundreds of times. For some reason, movie theaters, cosmetics, alcohol, and restaurants. Shocker, but restaurants do well in recessionary situations. So yes, it's definitely coming off of a high. It's got a higher low, bouncing off the 50. You got to wait for this thing to finish. It might finish right where it's at 139. It might go a little lower at 130, but be patient on that. I'll go ahead and put it down on the watch list for the bull. But it's early yet. It's early yet. I mean, this thing might fall apart for all I know, but I do like it. It has a chance. Thanks, James. All right. Orville, what about CMG? My favorite. I love a $1,700 burrito. Chipotle is a conundrum that makes, besides NFTs, this one makes the least amount of sense to me. I've got a small brain. But it's $1,700 a share, and it's holding in there. So, Orville, straightforward. Yeah, it's doing what it's supposed to. I mean, it's moving higher. It's set a higher low here just below the 16. It's set a smaller, a little bit of a higher high here just above 17. Well, I shouldn't say just above 17. That's $30. But it is. It's up pretty decent. So, sideways to up? Sure. He's looking at the 1660, 1640 vertical. Oh, he sold it. Okay, so you're doing in the money credits. That's okay. I'm fine with that. It's holding in pretty strong. Your line in the sand is going to be that 17 marker. And this thing can bust through it like in a week, in an hour. But I do like it. It's outperforming. It's consolidating. Something sideways, it's expensive as heck. And this consolidation range is probably, what, $100? Well, $50 at least from 17 to the top here, which I believe is 1750-ish. So if you can just put this on wide and be patient with it, it might work. Let me put it on the, can I put it on the sideways trades with a small up, with an up arrow? I love it. I don't know if this kind of looks like the rich people's meme stock. How's that? All right, that was a joke. I'm just being silly. Okay, let's get to Jared. Meta. Man. There's some fun stuff with this one, isn't there? Is the Metaverse holding on? Not according to its chart. Awesome stuff here, Jared. Looking, breakdown out 3 months range. Haven't really decided on a strategy or target yet. But yeah, it's worth an investigation. This has just been out of favor since it switched from Facebook. It's just got these really nice ranges that it's breaking down on. Increased volume. I'm straight putting it on the bear, and it's a good one. Jared, you just gotta just get on Thinkorswim, or if you've got some sort of analytical software. Let me get my thing back here, my cursor. Zoom back out. I don't want to go too far back, but find support levels. I don't know if you're going to find anything relevant in the shorter term. Draw some trend lines. Hitting 140 in the next couple of weeks makes total sense. Play with that. Look for diagonals. It should have a lot of expiration cycles, but it is definitely a really good bear. Thanks, Jared. Awesome. I think, yeah, okay, Scott, let me comment on that in a second here. Let me go to Dan. You mentioned the XLC. Check that weekly chart back and, okay, let's take a look at it. XLC. Let's go to this weekly chart here. Oh, geez. Right? Right? Yeah. Yeah. Got a very good point. And, what's cool about this, luckily the snapshot actually came back to this, but look at where it came. Is that 2 years ago? So this thing had its consolidation area 2020 into 2021, and we're back at that level. Yeah, and it is, good. Hey, that's a fun chart to look at. If that's going to give you guys a little bit more confidence moving through getting into something bearish in the sector itself, that's awesome. That's great. Thanks, Dan. It's a cool one. Okay, Scott's got one cool thing left. Real quick, let me answer Jared here. Sounds good to me. Yeah, Jared, go play with it on the meta. I love it. So I'll end it with this. Scott has a great question. He's like, any comments regarding the next Federal Reserve meeting next week, right? Yeah, I think it is next week. So the only thing that the markets were expecting them is to lighten it, maybe by a quarter basis point. But I think they're going to stay in line. They're going to give it its full. And the markets will probably not react because they seem like to me that they're reacting now. However, if that unemployment number comes in horrible, let's say that it's a whole lot more, there's a whole lot more people that lost jobs than expected, then you could have the argument of easing, although I don't think they will. I think that unemployment number comes in right in line or a little bit stronger. So there's my 2 cents on that. If you're a little bit reluctant and you want to see where all that volatility went, my gosh, the amount of movement that market had yesterday. I'm almost exhausted watching it. Let's do a couple of arrows here. CMG could be a break to the upside. And I do like Foot Locker, not only bullish, but also sideways. If you guys want to play a little bit more neutral, a little bit more bullish on CMG, a little bit more neutral on Foot Locker. But that's kind of what we have for now. Awesome stuff, guys. Thank you so much. I appreciate it, as always. So thanks for your participation, and we'll talk to you next time. Bye, guys.